But let's also move on. MphasiS posted a healthy set of Q4 earnings. In line with street estimates, the constant currency revenues increased 4% sequentially. The margins have inched up 20 basis points to 15.2%. Nitin, Rakesh, the Managing Director and Chief Executive Officer at MphasiS, joins us now to discuss their Q4 numbers. Nitin, hi, good morning, and thanks a lot for joining us. I want to first start by asking you about this growth that you've seen. It's been quite strong over the last many quarters. Can you tell us what is the expectation between verticals, BFS, insurance, tech, media, logistics? Where do you see the maximum potential in FY23?
Thank you for having me. I think so far, all through the 4 quarters of FY22, we saw pretty robust growth, which was very broad-based as well. So not just across verticals, but across client segments, top 5, top 10, top 20, new clients, Europe, and almost every vertical. 4 out of the 5 verticals actually grew 30+% YOY for the full year. So I think it's been very broad-based. Some of it is linked to, in general, the elevated demand environment for digital tech services. Some of that is also linked to the portfolio alignment we did over the last 2 years in aligning ourselves with the core themes of digitization, cloud migration, transformation, data, and of course, and that's paying rich dividends as well. We continue to adjust the portfolio. We do believe going forward, the growth trajectory and the characteristics should stay fairly similar. We're very focused on our client pyramid and moving clients to the next category and so on. So I think very, very broad-based growth approach. We do expect that to be the flavor of growth going forward as well.
Nitin, good morning. If we were in your earlier avatar, I would have asked you what's happening with mid-cap IT, right? What to do with the stocks. But as a CEO, you tell us, of course, the mid-cap IT can still find out their own niche, but this quarter's larger theme has been margin pressure on IT companies and perhaps IT spendings being a bit lower. Do you see this emerging as a bit of a trend, or you think this is a bit of a near-term hiccup?
I think there is the environment is obviously a little bit more, I would say, mixed at this point in time, because on one hand, we still have very robust order books, very robust demand, very robust pipeline. Almost every client, embarked on a significant, journey to reestablish their tech stack. That's not going to get done, anytime soon. So there's definitely a secular theme in play. Having said that, I think there also is a certain degree of watchfulness that has emerged over the last 2 or 3 months, given the environment, whether it's interest rates versus inflation or just the geopolitical situation in Europe and potential escalation and so on. So I think the mood is a little bit cautious while there is demand, and of course there continues to be a strong tailwind on the need for digital tech services. The supply side is obviously very strained, and that's what you're seeing in the margin, pressures that we talked about for some of our peers. I think our approach has been to continue to prioritize growth and, hold margins stable with all forms of puts and takes that combined give us that outlook. So, and I think for this quarter, we are actually very pleased that we are one of the few firms that were able to show actually an uptick in margin. And that goes back to, the pyramid optimization, the pricing environment, and of course, the growth leverage. So I think it will be, I would say, an interesting balancing act for the next couple of quarters till, we get a little bit more clarity on how the macro plays out. But overall demand environment continues to be very, very tailwinded in terms of a secular theme, overall.
Secular theme. On the banking financial services front, there was a growth slowed a little bit, Nitin. Could you tell us why, and what's the outlook like there?
Yeah, I think it's probably nothing more than a base effect, and of course there are parts of that segment that have a little cyclicality with interest rate sensitivity. So I think that's going to play out in the near term. But the application side, the tech side of that business is still very, very robust. So I think overall, we do expect certain cyclicality to play out over the next couple of quarters, but fairly pleased with the positioning we have, with the type of names and customers, and more importantly, the type of services and the engagements that we are engaged in those customers.
When you say cyclicality in BFS, what do you mean? I think you mentioned rates. Yeah, go on.
Yeah, I think there is a part of the business, for example, the mortgage link business, that has seen certain shock with the sudden spike in the 30-year going past 5%, for the first time since the financial crisis. So I think there is obviously a certain drop in certain parts of that business chain. And that impacts obviously the demand across the curve as well. But overall, if the interest rates stay robust, banks obviously have both a headwind and a tailwind. So we have to watch how the earnings play out. But so far on the tech side, no impact. On the non-tech side, some impact with interest rate spikes.
Okay. I'm most interested to know about the acquisition pipeline because you recently acquired the US-based design consultancy firm Blink, and you have about 2,800 crore cash on the books of MphasiS. Any plans to acquire any more companies? If yes, which geographies, which verticals would you be looking at, and anything in this calendar year itself?
So I think, Sunny, the approach is really competency-led acquisitions, which is what we've done third time with Blink. Blink obviously was the biggest of the three that we did in the last 3 years. So we are fairly interested in continuing to expand our competency through acquisitions, and I think there is a healthy pipeline of deals. Of course, we can't announce till we announce, and we'll continue to update the street on how that plays out. But combination of competency, potentially something that comes along with a good management team, and more importantly, if it is additive to our client base and our verticals. I think just the same characteristics that we saw with Blink is a potentially good fit. So I think very interested. That's the reason we continue to keep cash on the books while we did pay out a regular dividend as well this quarter. We announced it.
What about the hiring plans, Nitin, and in terms of attrition, how are you positioned?
I think there is a significant supply chain transformation underway, at least at our company. We obviously had a significant rotation that happened in FY21 and early part of 22 between segments. So the direct segment was actually a beneficiary of the ramp downs in the non-direct segment, and that helped us through early part of FY22. Over the last 2 quarters, we've actually onboarded more than 5,500 fresh grads from engineering institutes. That is very much part of the equation going forward as well. If you see the utilization number that reflects that onboarding, part of that is capacity creation. Other part obviously is the supply chain rationalization and construction of the lower half of the pyramid using this talent pool. So I think the focus has shifted from talent acquisition to talent creation. We were already doing a significant amount of reskilling internally. So I think if you look at our overall headcount addition has been fairly robust in the 25% range for the year. We obviously will continue to see a robust addition of net headcount. The nature of that will obviously shift with the pyramid optimization. And given the guidance that we've given for the direct business growth to be market leading, we do expect that we'll see good addition through the year as well.
Okay, we were having a chat with the management of KPIT Technologies a couple of days ago, and he did mention that the demand is so strong that he sees, visibility in terms of earnings for the next 4 to 5 years. Of course, they are in a different vertical as well, but are you as optimistic, Nitin? And do you think you can continue to do industry-leading growth, the kind that you did in FY22 with about a 21% growth?
Yeah, I think, if you look at the direct business, it grew 35-36% in FY22, which is kind of the benchmark for us in terms of most comparable metrics. And that's now 95% of revenue. So I think it is, of course, the guidance is relative. I called out the digitization, cloud migration, data, cyber, all of those are secular themes. I think if anything, tech spending is actually fairly robust despite the current macro environment. If you look at the data coming out of at the end of March from all the surveys, 75+% of clients continue to expect to have higher spending in calendar 22 compared to calendar 21. So I think all of those are signs that the nature of tech spend is not as discretionary as it used to be. And of course, there are parts of the value chain that you have to pick and choose and play in. And we've tried to align our portfolio to those parts of the value chain. And of course, we'll continue to work towards that. But I am fairly confident that I think the next 3 to 5 years, the transformation underway will play out and will give us opportunity to continue to play in the expanded, both addressable market, higher spends, and potentially even wallet share gains given our portfolio.
Nitin, thanks a lot for joining us. It's always a pleasure to talk to you and get insights into what's happening in your industry. That's MphasiS. It's been one of the best outperforming stocks over the last 1 year. Of course, in the last 3 months, everything has corrected in the IT space. The bank nifty is in the red, by the way, now down 35 points. And just look at Axis. It's now down 5%. So that's really your big loser, and that's dragging the bank nifty quite a bit. So 4.8 at the absolute lows of the morning. The other stock that we discussed